Okay, I think we should start. Now it's 5 after.
All right. Okay, great. So we'll get started then. Welcome everyone to DeFi Toronto, our second meetup of the year. Very excited to start off the year. We have some great speakers today, but this is our second online meetup of the year. So just wanted to say welcome to everyone that is new and everyone that's, sorry, also some of our followers and people have attended our meetup since 2019. So we're just gonna go to the next slide, Victor. Awesome. So again, like I said, welcome. Just wanted to let you know that, sorry if you could go back. Yeah. So this meetup is recorded. So it will be posted on Twitter, YouTube, LinkedIn for anyone to see afterwards. But with that as well, it is a meetup and we're not giving any financial advice. So just wanted to throw that out there. Everything here is for informational purposes. So if you have any questions, you can ask us later. But I'm gonna introduce who we are. We're DeFi Toronto. And again, like I said, for those of you who don't know who we are, we've been around since 2019. And we've covered a lot of great topics. We've hosted some incredible speakers from across the space, and some that have even gone to start off their own crypto networks and protocols that are worth tens of billions of dollars. And we've been very much like a grassroots type of organization that is really just focused on the promotion of DeFi education and giving developers and founders a platform to really showcase their research and projects. So welcome. And with that, we're gonna get started and we'll introduce Aleem Khamisa.
Everyone, my name is Aleem, one of the founders of DeFi Toronto. I've been with DeFi Toronto since the beginning. I am actively working in the DeFi space as a product lead, and my area of focus is governance and AMMs. So I work for a project called Delve, previously built Element Finance, and we're currently focused on building a fixed rates AMM, about to launch testnet soon in the next few weeks. And on a for a new AMM called Hyperdrive, and also working on a governance system called Council, which we deployed as kind of like a public good. It's a modular governance system which allows anyone to really spin up a DAO in like minutes. So check that out. The website is delv.tech, delv.tech, and you can find all that stuff there. Pass it off to Victor.
Hi everyone, welcome. We start DeFi Toronto since 2019. So it has been quite a few years, and we're still running. And pretty much every month, maybe except the December for Christmas, we don't run monthly meetup. We always have this monthly meetup and meet a lot of great, interesting entrepreneur developers, and so it's this great community we have here. Personally, I used to work in the traditional finance industry, mainly in pension fund investment for over 20 years. I got into crypto in 2014, and now I'm doing fundamental research for a crypto hedge fund. I also teach a course at the university, and also on the curriculum advisory committee of George Brown College on their blockchain development program. So welcome everyone.
Thanks,
Pass
Victor.
back to Sophia. Yeah.
Thank you. Nice to meet you all. My name is Sophia. I am the experiential marketing and events lead at ChainSafe Systems. If you don't know a little about ChainSafe, we're a research and development firm, and we specialize in the infrastructure development, cross-chain protocols, Web3 gaming as well. So we're known for our protocol level contributions to Ethereum, Filecoin, Polkadot, just to name a few. We have 133 people over 34 different countries. So we're kind of all over the world. But one of our missions is to really help onboard devs into the community and hopefully onboard the next 1 million devs into Web3. So if you want to know more, you can hit me up on Twitter at Sophia Hershey. And just for the people that aren't here, we also do have Imran and Mark. They are one of the co-founders also of DeFi Toronto. Imran is working on, he's currently working on Lang Wallet, so you can check that out. He's also a consultant and entrepreneur. Mark, he is also entrepreneur, researcher, and educator, and he has 15 years of experience helping startups. So his Twitter is there. And Johnson has also joined us. Johnson works at Virgo CX. He's actually at a trade show right now, so he's missing this meetup, but he's a marketing specialist. So if you want to know more about that, you can also hit him up there too. All right, next slide, please. Okay, great. So this is our agenda for today. As always, we have an amazing DeFi news recap from Aleem and Victor today. And then we have two great, amazing speakers. We're so glad that Chainlink Labs is here with us tonight. So we have Jimmy, who's a product marketing manager at Chainlink. So he's gonna talk to you a little bit about tokenization of real world assets, and then have a little break about community announcements. And then we'll have Ari here, who's gonna talk about his new book. He's a chief scientist at Chainlink. And Victor is gonna moderate that fireside chat, so we're excited. So with that, we're gonna go on to the DeFi news recap. Give it to you, Aleem and Victor.
Awesome. Yeah, it was, I guess, Imran and I, well, Imran contributed hugely to these slides. He wasn't able to make it, but really excited for him to be here. Can you guys hear me okay?
Yep.
Okay, awesome. Just want to make sure. So yeah, we'll just kick it off. I want to keep this really light. I want to, save the majority of the time, of course, for Jimmy and for Ari. So I just want to touch on a few very quick highlights over the last month. And starting with, of course, a lot of people are wondering what's happening with the Bitcoin ETF, how things are working out there. We saw record flows, upon the ETF, being approved and kind of being live. And we've seen some really stellar high volumes over the last several weeks. We've over the last couple of months, we've now seen kind of volumes stabilize a little bit and come down. Just last week, volumes were pretty flat. And I guess everyone wonders what that impact will have on the crypto ecosystem overall, just in terms of, obviously everyone is excited about this potential bull run that we're embarking on. So that's just a really interesting happening over the last week. And of course, total volumes for the Bitcoin ETFs have, surpassed 5 billion, and that's pretty significant, I think, for, way larger than all of the ETFs that are currently listed on the S&P 500, or the S&P rather. Next slide. Okay, so Bitcoin recently hits a 1 trillion market cap, which is, pretty significant milestone. And it's interesting to put this into perspective, around the money supply of other currencies around the world. So with the 1 trillion market cap, that actually puts Bitcoin, if you compare it to the MO money or the M0 money supply, which is, M0, thanks, Victor, which is kind of the money supply or the amount of currency that's currently in circulation, plus commercial bank reserves balances at the central bank. That puts Bitcoin in sixth place, I believe, which is pretty amazing. So Bitcoin being a sovereign currency, is quickly becoming a currency of choice for many around the world, including the institutional segment now, and corporations who want to hold it on their balance sheet as, a store of value asset. So that's a great, amazing kind of feat achievement for Bitcoin and for the entire global community around crypto. And I hope that continues. Next slide, please. Yeah, so I mean, there again, just around the Bitcoin ETF, more and more we're starting to see a lot of more traditional financial institutions, including a lot of banks, want to be able to custody the asset. And we saw that there were 11 spot Bitcoin ETFs that were approved, and probably many more that are in the application process. We've got many more recently applications that have come through for Ethereum. ETFs as well. And I think we're going to start to see, a lot of institutions also jump on that wagon as well. I mean, this is all good for the space. As a meetup focused on decentralization of finance, there's some pros and cons here. I mean, the cons are, of course, with large institutions custodying a lot of assets, there is, centralization risk, right? But at the same time, it's making the asset class much more approachable and accessible to a lot of folks that, will use an ETF as a stepping stone into non-custodial crypto, right? And DeFi. So I think this is all still good, but it's good to see that, there is that institutional interest out there. Next slide, please.
Yeah, I think when I saw this news, I wonder what Canadian bank think. Whether they will do the same thing or not. Right now, the ETF is not provide the custody, is not provide the bank, right? Canadian have a ETF for way before US, but we still no interest from the Canadian bank to want to be a custodian.
It's a really good point, Victor. And a lot of, in Canada, our banking system is known to be ultra highly conservative, unfortunately. And, they're usually late players. They'll be laggards when it comes to crypto. And I think a lot of the large fintech firms are really taking a lot of market share from at least, early adopters of crypto who want to save in crypto and want to continue to invest in crypto. For example, Wealthsimple, institutions like ShakePay, which seems like these organizations are really turning into pseudo or neo banks. Coinbase recently re-entered Canada as well, and of course, Coinbase has their own custody solution. There is a couple of custody solutions in Canada that are native to Canada that were born and bred here. One being Balance. And I believe we've had George, the founder of Balance, previously on our meetup as a speaker. And another one being Tetra. And I believe, both of those, CoinSquare, for example, is using Tetra and probably other custodians as well. But Balance is definitely one to look out for. I think, they've been in the space since 2016, 2017, I believe. And have had billions of dollars of assets, crypto assets under management or under custody. So hopefully with a more robust infrastructure and ecosystem as it develops and matures, the Canadian banks will participate. And if they don't, they'll just have their lunch eaten by the fintechs and neobanks. Cool. So Coinbase recently announced their latest earnings. And it was really interesting the way they did this. Coinbase earnings are now on chain. So you're able to actually mint an NFT, which will happen every quarter to kind of commemorate each milestone of their ongoing effort to bring economic freedom to the world. Really cool that they're doing this. I think this is kind of a little bit of foreshadowing of what's to come in, the tokenization of real world assets. And it's kind of a perfect segue into the talk that Jimmy is probably going to do around tokenization of RWAs. And Coinbase has taken a little bit more of an aggressive stance in pushing the boundaries of what we could do with traditional instruments for investments, and recently expanding to the Caribbean, to Bermuda as well, where they have a very, very robust regulatory framework around BATA. To be able to start their global derivatives exchange. They've launched Base, which has garnered significant activity and volume as a layer 2 built in the world of optimistic rollups, of course, tied to Ethereum. I think all of this is good. I mean, even though it's a centralized entity, I think the fact that it's really participating in this layer 2 area and pushing crypto forward is all really good. And again, I'm excited to see all of the cool innovations that they're pushing forward, including, tokenizing their quarterly earnings. I think that's great.
And also provide transparency, right? Anyone in the world can easily access to the historical earning, and it's immutable.
Yeah, that's an excellent point. Absolutely. Yeah. Okay. I think I got just a couple more slides left. So, usually as we start to see things move into kind of bullish territory, we start to see a lot more interest in the crypto space. And I think, even through the bear market, we actually saw pretty solid traction across a lot of protocols. There was still significant growth across layer 1 and layer 2 blockchains. And now as we get into this, kind of a little bit more of a starting to get into this euphoric stage as we get into the year of the Bitcoin halving and also Ethereum getting into that territory where we're starting to see it become a very deflationary asset from a supply standpoint as EIP 1559, which is focused on burning fees and the native asset and supply starting to shrink. I think things are really heating up, especially around, of course, the ETFs have a role to play there as well. But lots of users coming in across the various chains. Just in 2023, Ethereum was, as you can see here, able to acquire over 15 million users. Polygon, was, a top performing L2 as well. And they've recently moved into ZK territory. I'm going to talk about that in a second. Acquired 15 million. And of course, more on Bitcoin. There's been a lot of DeFi development on, Bitcoin, especially as it relates to, Toronto had one of the first DeFi companies in the world focused on Bitcoin, which is called Atomic Finance. And they're actually building using discrete log contracts. So Bitcoin is starting to see a lot of really interesting activity as well in that space, also with ordinals and NFTs and all that as well. Solana, of course, has been a really big one that we've seen a lot of activity. Unfortunately, they're still having, it seems like, issues with the stability of their infrastructure and blockchain. And we've seen that there's been some outages. And of course, in the early days, there was a lot more, and now there's, probably fewer, and they're less, concentrated or frequent. But yeah, there's still some issues there. And I think, they're still kind of working out the kinks. And really cool to see Arbitrum and Optimism. And I think collectively the L2s now way surpass the amount of activity we're seeing on Ethereum on the base chain. And this is really great because it's much easier for users to be able to onboard through L2s like Polygon, Optimism, and Base and Avalanche and many others. Well, Avalanche being L1, but it's cheaper and less costly, and I think that's great. So yeah, lots of great traction here.
Yeah, it's quite particularly impressive that the Base, which is the layer 2 built by Coinbase, is getting almost 2 million users. That's quite impressive growth.
Yeah, in just a short period of time. Definitely. Next slide, please. Okay, so kind of getting into more of like the DeFi world a little bit, and of course, like the D in DeFi, being decentralized and really being focused on open, decentralized governance systems, and central to that is our DAOs, right, which enable for collective participation of a community that's supporting a protocol, and allowing people to vote on important proposals, participate in important discussions and discourse related to proposals. The problem in the DAO space is that there is a lot of noise, and oftentimes DAOs use many different tools and platforms to facilitate a lot of the governance activity. And governance practitioners will have to use platforms like, well, maybe a homegrown tool for on-chain voting. You might use Snapshot for voting that's off-chain, for maybe pulse checks. You might be using Discourse or Commonwealth, a lot of platforms for governance discussions, or Discord as well. So it's really cool that we now have this one kind of platform called DAO Catalog. And the whole idea here is to be able to, have a searchable longitudinal history of all of the important events that have happened for it, like around DAOs. So it's kind of really interesting to be able to index all of these DAO historical events, access them in an easily searchable way, and just make that information, kind of more high signal, less noise. So I think this is great for the space. Next slide. Yeah, Polygon has been, as we know, over the last couple of years, has been really focusing on zero knowledge or ZK tech. They launched and built a ZK EVM, which is currently in beta, scaling solution, and I think that's really their primary, solution now. They've recently launched a new Type 1 prover, which will allow ecosystem chains like optimistic rollups and others to be able to unlock ZK or zero knowledge proof technology on these layer 2s. So, this brings a lot of benefits, including, of course, privacy being really, really important in the space. So just look out for that. I think Polygon is quickly becoming a front runner in that space, amongst many others, that are emerging and like the ZK Sync, for example, and many others as well. I think I have one more slide. Yeah, last slide. We did talk about Oval last month, but so UMA protocol is really, been building a lot of really interesting infrastructure in the space, including, they've got an optimistic oracle, they've got a bridge called Across. They've also got Oval, which is, really their answer to how do protocols address this issue around minor extractable value, which is MEV, right? And there's hundreds of millions of dollars that protocols are losing to MEV and ultimately their users. And this was an interesting collaboration with Chainlink. And they built this solution in partnership with MEVShare, which is a solution offered by Flashbots, which really allows you to be able to split and share the revenue from minor extractable value. But yeah, they partnered with them to be able to do this, and a lot of DeFi protocols I think will benefit from this, especially those where liquidations are happening. So think lending and borrowing platforms. I think they did an analysis, and I believe it was Aave. If Aave were to be using this over the last year, they would have saved about $62 million, which could have been contributed, to their protocol treasury or even, shared amongst users and whatnot, however they wanted to do that. But Oval, keep an eye on it. I think it's going to be a really, really important protocol to be able to kind of combat, MEV and really redirect a lot of that opportunity to the protocols themselves. Okay, with that, I'm going to end there. Yeah.
Alim, do you know if there's any effort by the Ethereum community to eliminate, this leakage?
It's a good question, and I think just by virtue of the fact that like mempools are visible, right? You can see what's going on in terms of how blocks are being constructed. 90% of block builders today are involved in MEM, and many through Flashbots and MEVShare. So it's just another revenue stream, and to me it feels like this is just part of the space, and there are lots of solutions that are combating MEV, so end users are able to get the most efficient, best pricing on exchanges. CowSwap, for example, recently created Cow AMM, which is an AMM, like think Uniswap, also focused on combating MEV. So I think it's just a thing that is part of the space, and there's different ways that protocols and end users can benefit by creating technology either to kind of combat it or to work with it. So yeah, I'll end there, but I'll pass it off to you, Victor. But yeah, thanks for listening to the DeFi update for the last month. Cheers.
Okay, thank you, Alim. Since today we have two great guest speakers, both come from Chainlink, I thought, just show you a few slides, give you some background information, the context about this network, maybe help you understand our first guest presentation better. So what is Chainlink? Chainlink is an oracle, as you know, and in fact, it's a #1 oracle in the blockchain space. How do you measure? Well, they support the most protocol They not only support most protocol, but also they help secure most value. How do you calculate total value secure? Is basically the total value log on those protocol who use Chainlink. That's how they calculate, they sum them up. So Chainlink is number one, and if you look at the market share, it's roughly 47%. So that's a really a strong leadership there, and then followed by two others. Then basically there's the rest are very, very small. So when I look at this chart, it remind me of Canadian, some of the Canadian industry, for example, grocery industry, right? That a little bit dominant by a few big company, and a small company only have very, very small market share. And this one, the green line is represented the active user every month that use Chainlink. So you can see there's a significant increase since late September or October to the early December. And it come down a little bit, but there's a tremendous growth in the user activity, which is great. Perhaps may explain a little bit, we see the price of the Link token has appreciating quite well since October. And Chainlink also have a lot of talents, a lot of human capital. These two charts come from developer report that put out by Electric Capital. On the left-hand side, that's the total number of active developer that based on the GitHub commit, that's how many developer active every month. And in the right-hand side, it's a subset of the number. The interesting part is that this particular subset is measured established developer. The way they define established developer is that the developer has to be in the blockchain space minimum 2 years. So you can see that Chainlink has attracted a lot of human capital, especially those who has experience, who has been in the industry more than 2 years. So it's really great news to see that the attraction of the network. And finally, I did a little bit survey among the community. So asked people where the tokenization will happen on what blockchain. And the left-hand side, I just pull among our community member. It's a small sample, only 10 people vote, but majority say that it will be on L2, Ethereum L2, and mostly likely will be the L2 that are supported by centralized exchange like Coinbase. On the right-hand side is a similar poll, but I did on LinkedIn, and again, Ethereum L2 is more people vote most that thinking that the tokenization will happen. So now we're going to pass on to Sophia to introduce our first speaker.
Awesome, thank you. I'm just going to give Jimmy just access to share slides, so you're good to go. All right, so with that, while Jimmy's just getting his slides ready, I'll give you guys some more information. So Jimmy is a product marketing manager for Chainlink's data solutions and asset tokenization efforts. He has his BS in economics from Bentley University and MBA from the Carey School of Business at Arizona State University. Prior to Chainlink, he built supply chain automation solutions at Intel. He was also the CEO of Megaton Coffee. So I'll pass it to Jimmy to talk to you more about tokenization of RWAs.
Yeah, thanks so much. All right, well, glad to be here. We're good. You can see the slides and you can hear me?
Loud and clear.
All right,
we're good.
wonderful. Okay, well, really excited to be here, guys. Thank you for inviting me. This is good inspiration. I actually, I live in Portland, Maine in the States, and I have a co-founder of Blockchain Maine, which is a similar type group. So this is great inspiration. We only do in-person stuff, so maybe we can expand to online things. So appreciate that, guys. Well, So I'm here to talk to you guys about the tokenization of real world assets, and then how we're viewing that from Chainlink's perspective, and then why we think this is a really exciting space to be in, right? This little corner of DeFi is growing fast, and I think is going to be just really, really something interesting that changes how the world operates, honestly. So happy to dive into that. I've got a few sections here. I mean, we're going to get pedantic to start, right? Like, we're going to define it for just a second here. Then a little bit like, what it is, why you should care, and then the Chainlink viewpoint of how we're enabling this. And then got some fun resources for folks who, might be inspired to learn more or go build something. And we'll come back to those developer charts that Victor had as well, so we can go full circle here. So as promised, like, I think the first thing we want to do is just make sure we're talking about the right thing, or the same thing. And so this is the Chainlink definition that we use when we go out and talk about RWAs, and we'll talk about this term in a second. But look, is it tangible? Does it have physical or economic value? Does it primarily exist off chain, right? I think this is where we get this is what the real world part is trying to get to, something that primarily exists off chain. And then, a lot of these things do meet these above criteria, but they might not generate, like, have some innate utility or some income or appreciation or yield or something like that, right? So when you put all these things together, this is the interesting space. These are the things, the assets that we care about, the ones that when we tokenize have like a really interesting dynamic to them. So I think it's just really good to put these guardrails or put this framework around our understanding. But to go one level deeper, I actually don't really love the term RWAs. I know it's sort of the industry term, but I'm just not so sure that our industry is great at naming things. And so part of my mission throughout the years is to get us to switch to talking about tokenized assets. And I think the reason why is, I think it's just a more precise term, but really when you dig into it, there's really a couple ways you can slice it, right? We're talking about all assets are they're either digital native or they're, physical world native. So things like real estate or commodities like gold or silver. And then, on the side of like bonds and securities and deposits, like these things are digital native, right? So, but they're still one of the biggest opportunity spaces when we talk about RWAs. And so I think what we're really talking about is we're talking about tokenizing assets and bringing these assets on chain, representing these traditional assets in, on the blockchain, and then all the things that come from that. So this is sort of my take, but I do think this 2x2 matrix is like a good, a good breakdown of the scope of assets and like what we're talking about when we talk about this. And if you're wondering why we should care, like, I can think of a few trillion reasons, right? This is a huge, huge, huge market measured in trillions. And it makes sense because we're talking about, tokenizing existing assets, things that are already measured in trillions, right? Like real estate is already measured in trillions. The bond market is already measured in trillions. So we're really talking about, replatforming of all the world's assets. And when you put it that way, it's like, okay, well, maybe this chart's actually too small, right? Like maybe this opportunity is even larger. And so the question you really have to ask yourself is like, where is there the confluence of a regulatory framework that's friendly enough for these things to start happening? And where is the technology also at a level where these things can start happening, right? Not every asset and every regulatory framework is going to allow these things to happen in the next couple months or year, right? Like some of these things might take decades, right? But when you try and figure out like what's next, try and understand like where's this confluence of that regulatory framework and the technology at the right spot for these things to happen. But huge market, huge opportunity, just like really exciting because we're talking about replatforming, all the world's assets basically. Now maybe a couple $1 trillion didn't like get you super motivated or excited or interested. For me, this is the really interesting part, right? Like I call these superpowers, but what I think the interesting question is to ask is like, whenever there's a new technology that's happening, right? Like the question to ask is, what is possible now that was not possible previously, right? Like what's uniquely enabled? What can we do now that we couldn't do before? And so when you tokenize an asset, when you represent it on chain, like it gets these superpowers, right? Like there's instant settlement, you have access to global liquidity, there's transparency and traceability, there's composability, right? Like we know, like on the settlement piece, right now, if I send money from, my bank account to a friend's bank account in, say, Canada, it might take 2 days, right? But when you transfer value peer-to-peer in a blockchain network, it's effectively instant, right? Like this is something where value settlement happening instantly. This is 10 or 100x better than additional rail or like existing rails. Same with like global liquidity. What if anyone who had a wallet could have access to buy this asset, right? Like this is a big unlock. Transparency, traceability. These are sort of inherent properties of the blockchain that let you do a lot of things from an audit compliance automation standpoint. But my favorite is composability. Like when you tokenize an asset, now all of a sudden, all the stuff you can do with that asset, or all the stuff that you can do in DeFi, you can now do to that asset. Like just imagine you have a house, you tokenize your house or a piece of property or whatever. Like what if taking a loan out against this house is as easy as clicking a couple buttons on Aave, right? Like what if having a large piece of real estate and doing fractional ownership and dividing it between 100 people is as easy as, having fractional ownership of an NFT, right? Like this is like a really interesting, thing of like, what can you do now that this asset is programmable with all these other primitives that we've built? So a lot of interesting things. I call them the superpowers of tokenizing an asset. Here's a very like non-exhaustive list of these assets, right? That we think have a lot of potential to be tokenized. I think it's helpful to think of these things on a spectrum of market size and liquidity. And market size is, pretty self-explanatory, but liquidity is really instructive of, what superpowers do we care about, right? So if you take something that's like not super liquid, like real estate, like we literally hire, right? Like if you want to sell your house, you might hire a real estate agent and pay them a 6% fee just to find someone else to buy your house. So if you have like an illiquid market, like imagine instead of like anyone in the world who just had a wallet could buy this, right? Like that's a big unlock. That's like a lot of percentage points on a large number that all of a sudden gets unleashed, right? So that's a really interesting thing. Maybe if you're on the liquid, like on the highly liquid side, like bonds and asset-backed securities and that sort of stuff, maybe you care less about like global liquidity and maybe you care more about automation and transparency and back office things or instant settlement. Like, this sort of where you fall on the spectrum dictates, what of these tokenization superpowers will uniquely benefit the asset. Just going to toss a couple.
Jimmy,
yeah.
Sorry, Jimmy, I just refer to the previous slide, real estate. I used to cover commercial real estate, and one thing even in the residential real estate, the title search, right, is every time you buy a house, you have to do title search, and even after title search, you still have to buy title insurance. So this is just so inefficient, right? Why couldn't we just have a immutable record that everyone know whether the title is clean or not?
Yeah, agreed. Agreed, very much so. There's just so many unlocks that you can have here, right? And like, title insurance and all these sort of off-chain legal structures like that are very embedded, like these things aren't changing tomorrow or next year, right? That's like the longer play. So it's again thinking of like we're on that spectrum of like regulatory, the regulatory environment and technology. Like the technology exists, but we're not quite there on the regulatory front. Maybe in like a new or emerging market where like you don't have these entrenched things, like you can do it, or maybe there's some other way around it that I haven't thought of. But totally agree. So much inefficiency. There's so much that can be gained here. Wanted to just like toss a few logos on here. I'm not gonna spend a ton of time on this, but the impression I want to make is that there's players here on both the TradFi side and also the crypto native side. They care about different things. Sometimes they care about the same thing, like sometimes there's overlap. So like, for instance, if you take like, say, tokenized bonds, right? If you're a DeFi protocol and now you have access to buy on-chain bonds that give you yield, like that's a really cool thing for you, right? Now you can like distribute yield to like your, I don't know, your stakers or whatever you're doing. But if you're like Goldman Sachs, like you don't need a new way to buy bonds. Like you already buy like billions of dollars of these things a day, right? So maybe what you care about instead of like, maybe what you care about is actually maybe the automated settlement, right? Or maybe like there's some compliance things or some other automation or back office savings, right? So just like just know that there's a lot of different players in here. They might care about different things depending on what they're trying to do. But it all stems from tokenizing assets. If you go to the illiquid asset side, we just talked about real estate. So, if you're illiquid, like you care a lot about getting access to global liquidity and expanding the pool of potential buyers. Maybe your tokenized fund, like what's really interesting is like maybe anyone with a wallet can participate in your fund, or maybe you're really interested in the governance and compliance aspects that you can now do, right? So just want to show you the scope of, it's a broad spectrum of folks who are interested in this, right? And who have a part to play in this and who will benefit from this and all that sort of stuff. Now sort of like gets into like, where does Chainlink fit in? And the piece that's important to understand is like, just because you tokenize an asset and you represent it on chain, like it's not inherently useful, right? Like it needs stuff, right? Like otherwise you just have like kind of a dummy token, right? So it's like, what does it need to be useful? Well, it needs data, right? Like it needs data. It has to have some level of security and transparency that you can trust, and it needs to be interoperable across multiple chains. So like with data, like let's say maybe you mint a house token, right? Like you put a house on chain, like people are really interested in like, what is the price of this thing, right? Like it needs data. Maybe they're interested about other metadata about this, right? Like to make it useful, it needs to be imbued with data. This thing, the next one is a little underappreciated, I think, but will become much more appreciated soon, is that you need to have assurances that it's the secure minting is happening, right? So it's like, imagine like I have a really small real estate investment fund. I tokenize a piece of property, like I have house token on the market, and like people are buying it and trading and it's all good. And then I'm like, you know what? I can make a lot of money if I mint 2 house tokens. But if I mint 2 house tokens without actually, having any more houses, right? I've got 2 claims on the same underlying asset. That's a problem. So what you need is some sort of insurance, right? Or assurance that like you have a capped on minting, secure minting, like there's not like an infinite mint attack, that sort of thing, right? Otherwise, you're just blindly trusting the party who put this thing on chain not to overmint or do other nefarious things. And then interoperable, super important, especially we talk about bringing institutions on chain. Like a lot of the banks and stuff, they're super interested, but they're also building their own chains, right? There's a bunch of bank chains. And so if you have like the greatest asset in the world on your chain that doesn't talk to any other chain, like you're not accessing global liquidity, right? So if you want your RWA, your tokenized asset to be useful, you have to do more than just tokenize it. You have to give it data. You have to make sure there's like these security assurances, and you have to make sure it's interoperable wherever there's demand or whatever part of the on-chain economy you want it to participate in. So yeah.
Sorry, I just want to refer the data, and right now in the illiquid private asset, the middleman is the one tend to have a lot of data, and so they try to sell their servers and charge a fee because they have more data. A lot of broker in the traditional finance industry is to leverage the data to charge, because you don't have public access. So it's great that if you tokenize the private asset, and everyone can have easy asset to do their due diligence.
Mm-hmm. Yeah, I mean, so much of blockchain is about disintermediating middlemen and bringing new efficiencies and driving down costs and all this sort of stuff, right? And that's another great example. And so from the Chainlink point of view, like we are leading the charge here on tokenized assets, and this is our North Star, right? Like we're industry standard infrastructure for tokenized assets. We're providing security, data, and we're enabling their cross-chain movement. And for those of you who are maybe not as familiar with Chainlink, and Victor did a great job of teeing us up here, but this is our suite of products. So you can see that we've got 3 pillars. We have data, we have cross-chain, and we have compute. And so data feeds are the most well-known product that we have, which provides data on chain. We have CCIP, which is our cross-chain interoperability protocol, which allows things to move across chains, basically. And then also we have proof of reserve, which does a lot of things, but among them is like the security and the minting assurances. So this is the Chainlink platform. We think is really well positioned for the tokenized asset to support this industry as it grows. And we'll dig a little bit more into it. This is a slide that sort of the impression I want to make is Chainlink has been doing this for a long time. We've been bringing tons of data on chain for a long time. We've been built into the backbone of DeFi, and now we're taking all this expertise and all this infrastructure, and we're helping bring this to this emerging trend, right, of tokenized assets. So this is a metric we call transaction value enabled, which is basically, you know, what's the dollar value of every transaction that used the Chainlink service to happen, or data feed in this case to happen. It's a really big number. Been around for a while. A lot of protocols have used this a lot. So the impression is just to show you guys that like we've really cut our teeth building this industry standard infrastructure, and now we're going to power the same thing for the tokenized assets. To put this into perspective, like, you know, that was sort of a little bit abstract of like what the how the Chainlink products work and that sort of stuff. And we're talking about these three things that you need to embed in a tokenized asset to make them useful. Like, just to put, you know, theory into practice, you can imagine like a stable coin, right? Like if you, congratulations, we've minted, you know, DeFi Toronto stable coin, you got some backing, it's like, it's great, you're super pumped about it. Well, it's like, okay, well, how do people use this, right? Well, maybe you need data, right? Maybe people need a reliable understanding that this is actually in fact at like $1 or whatever. And then once you have a Chainlink data feed, like congratulations, now you can be listed on Aave and Compound, right? So that's like a gating factor. So it's like, great, this gets you in the door, you have the opportunity to participate in DeFi. Well, now people are deciding like what stablecoin they want to use. I was like, well, I want to use a stablecoin that I know can't be over minted, right? That I know the off-chain reserves are cryptographically proven to be, you know, matching the on-chain amount. That's where proof of reserve comes in. And then you're saying, great, can I use this on every chain that I'm interacting on, right? So you need like a, you know, cross-chain interoperability solution such as CCIP, and that's what gets you sort of to like this unified liquidity. So that's kind of putting the products into, you know, sort of into action, so to speak. So putting it all together, basically tokenized assets poised to supercharge not just DeFi, but also TradFi. Like I said, I think there's, you know, we're replatforming all of the world's assets over the long haul here. So big opportunity, but we have to keep in mind that we have to provide some utility to these on-chain tokens for them to like, or give them some quality so that they have utility. So we need to imbue them with data, right? The right security assumptions and assurances and all that sort of stuff. And so you just have to produce this ecosystem of functionality in order to unlock this potential that we're all so excited about. So if you're interested to like learn more, go deeper, maybe start building, I've got a couple resources for you. So we have a Chainlink ecosystem site. You can go get inspired by seeing all the projects that are building with these products. And a lot of them, you know, there's a lot of tokenized asset projects out there. We have some great educational resources, and of course, some great starters for the devs out there. So yeah, go to the Chainlink ecosystem page, go check out all the projects. There's a ton of them on here. You can see what they're building. Maybe you get some inspiration. We've got a great learning hub at Chainlink. If you want to dive deeper, like I took a screenshot here. We have a whole like thing on asset tokenization. If you want to dive super deep, would highly recommend. We've got some great content. And then if you're more like someone you want to roll up your sleeves and start getting your hands on the keyboard to code, like we have a great dev.chain.link is a really great resource. A lot of like Kickstarter or jumpstart guides, walkthrough tutorials, masterclasses, that sort of stuff to give you some quick starts on how to go. And so that's kind of it. I'm excited to be here. Thanks for having me. Would be happy to continue the conversation on LinkedIn or Twitter. Just feel free to find me there. And yeah, thanks so much.
Thank you, Jimmy. Look like we have some question from audience. Sarah, go ahead, unmute yourself. Go ahead to ask our speaker.
Thank you, Jimmy, for the presentation. I just wanted to get clarification. So is the business, are you an oracle? Are you a bridge? Are you both? And if you're both, what part of the business is the bridge part and what part is the oracle? I just wanted clarification on that. Thank you.
Yeah, so Chainlink, we're like we're bigger than just price feeds, right? Like people know us for price feeds, but now we've grown into like a full proper platform of solutions. So the answer is like, we are like this decentralized compute infrastructure that supports things like bringing data on chain, that supports like a cross-chain solution. So those are all individual products of the broader platform.
Awesome.
Jimmy, I have a question myself. So when you say proof of reserve, let's say somebody tokenize a gold and they put physical gold in somewhere stored. So if you want to prove the reserve of the gold, do you mean Chainlink actually going to verify how much gold they have?
Yeah, so in that case, right, so like we worked with like Pax Gold for their Pax G product. So there's an auditing firm or multiple auditing firms, and we take that attestation and put it on chain. So I'm not there checking it out.
I got a quick question for Jimmy. Just curious, like on this kind of tokenization of all these assets and like replatforming the world, or the this big arena of assets, what have been some of the challenges for the large FIs? Like what infrastructure or tooling is still missing for them to kind of cross the chasm there?
So the big thing is, so if you're like a financial institution, you've built your own chain, right? Like for regulatory reasons or whatever reasons. And so it's interoperability with any other chain that's not yours. That's the big one.
Got you. Okay. Yeah, which also kind of like begs the question, like why build your own chain when you can use something that's more interoperable?
Yeah, maybe not a question for me.
Yeah, I know.
I mean, like, I think it comes down to like, it just comes down to regulatory reasons. There's like, how do you KYC your customers on Ethereum? I don't know, right? So like, if you build your in-house solution that allows you to onboard folks and blah, 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 like then you can stay on the right side of the law. I think that's probably what it mostly comes down to.
Cool, thank you.
Nice. So we have a few questions in the chat as well. So two from Talal. So the first one is, which L1s are emerging as the leaders in the tokenization space? And are they mostly private chains? And Avalanche has had some interesting partnerships.
Yeah. Who's emerging as the tokenization leaders? And everyone is going after this. I mean, certainly Avalanche has made a lot of notable headlines. That's probably the one that I thought of first when you said this, but I don't know. I haven't done any analysis on like which one has the most tokenized assets on chain. So I don't have like a super informed opinion other than probably what other people have seen the headlines as well, unfortunately.
Okay, awesome. And second question is, how does Chainlink help with tokenizing private funds or bonds?
Yeah, so this is a really good one, right? So like there's a step before the stuff I just described. Like you have to like actually tokenize it and you have to take custody of these assets, right? And so we don't do that. There's other custodians and tokenization platforms out there and solutions. So like you work with some partner and Chainlink has a lot of partners here, but like there's some third party that helps you like actually get this thing on chain. But then once this asset is on chain, that's when we like, if you make it, that's where like basically, okay, let's build a Chainlink data feed for it. So it has the data you need. Okay, let's make it interoperable via CIP, right? Like, so that's how we don't like get the thing from off chain to on chain in terms of recognize or creating it as a token. But like once it's there, then we like give it all the stuff it needs, like the functionality it needs.
Great. Does anyone have any other questions? Okay.
It's a fun question. I don't know, other than Fireblocks seems to be like really cruising right now. But yeah, I don't have like a super informed view on like who winners are in these space. We're sort of like almost by definition, Chainlink, we're like blockchain agnostic and all that sort of stuff. But yeah, I mean, Fireblocks, you can't help but see they're everywhere.
Well, thank you.
Thanks. Okay, I think we're gonna cap it off there. Well, Jimmy, do you want to say anything else, or?
No, just, hey, thanks for having me. Really appreciate it. This was a lot of fun. And yeah, thanks for having me.
Are you open to answering one last question that we have in the chat?
No, I think we best steer clear of competitive questions, but do appreciate it.
Sounds good. All right. Well, we're really appreciative you having you here, and it was just a great presentation. So thank you for being here. We really appreciate it.
Yeah. Thanks so much.
Thanks so
Awesome.
much. That was awesome.
Thank you, Jimmy.
Yeah. So with that, we're going to pass it on to Victor.
Okay. I don't know if there's any community announcement before we proceed to the next session, Fireside Chat. Any community announcement? Okay, doesn't look like. Okay. Hi, Ari.
Hi, Victor. Hi, everyone else.
Great. Hold on. Let me just share my screen. So welcome. Our next session is Fireside Chat with Professor Ari Juels, and welcome. Ari is the Chief Scientist of Chainlink Lab and also a professor at Cornell University who teach computer science. And he has many hats. He used to work for RSA as a chief scientist, also the co-director of the IC3. And his research interests cover blockchain, cryptocurrency, smart contract, which we will touch on in our conversation today, and cryptography and privacy. And I also want to thanks Ari for sending us a 50-copy of book of his new book, The Oracle, to share with our community. So which we will distribute in our March meetup, in-person meetup, so that I can give to community member. So that's a little bit introduction. And so let's start our fireside chat. And can everyone see the book? I hold it in my hand. Okay, here's the, oops, it's hard to see because the screen. But anyway, I have the copy and just a beautifully print book. So I prepared some question. And Ari, how do you get the inspiration to write this book? You know, what's this book about? This is the Oracle. What's the story about?
Yeah, in a nutshell, this is a story about a software developer at an Oracle company, one reason for the title of the novel, who is the target of what the book refers to as a rogue smart contract. In this case, it's a contract that offers a bounty, a monetary reward, cryptocurrency reward, for whoever kills the hero of the novel. And as we know, smart contracts are in principle unstoppable if they're programmed in that way. So the hero is confronting an unstoppable force. And this, of course, is good thriller material. And Oracle plays a second role in the novel in that it's an Oracle with a machine learning model that adjudicates claims against the smart contract. In other words, it's an LLM in particular, ChatGPT type piece of software, which by scanning news reports determines whether or not a crime has been committed and who is responsible for it, and therefore is paid the bounty. So that's the story in a nutshell. As I mentioned, the title derives in part from the fact that the hero is working in an Oracle company. Oracle is a technical piece of, or provides technical support for the rogue smart contract. But additionally, there's an element of ancient Greek history and mythology, and a focus in particular on the Oracle of Delphi. That's a component of the book. To answer your second question, Victor, what was the inspiration? You actually flashed it up briefly on a slide there. One of the, I guess, two forms of inspiration for the book That was a paper that I co-authored back in 2015, 2016. That's the paper, yep. On warning of the risks of abuse of smart contracts for criminal purposes, warning about the possibility of rogue smart contracts, as they're called in the novel. So the novel, in some sense, is a dramatization of that paper. At the time the paper was written, things like ChatGPT and LLMs that could interpret news articles didn't exist. So we sort of glossed over that aspect of or requirement for a rogue smart contract. But we did basically describe the setup in the novel there. So that was one form of inspiration for the book. Sort of more literary genesis of the book derives from a piece of architecture, actually, a pedestrian bridge or sky bridge that I used to pass on my way to work in New York City, in Chelsea, now part of spanning a couple of Google buildings. And I really like this sky bridge. It's an Art Deco sky bridge, antique sky bridge. And thought to myself, this would be an ideal place to have an office. And so one day I just sort of imagined the hero of the book sitting in that sky bridge. And that too was part of the genesis of the novel.
Okay. And you know, in your book, you talk about the Oracle of Delphi, which is from the Greek history, and where the blockchain Oracle is very different things, you know, which you know, you work for a company, work on the Oracle. How does these two connect? How do they relate? How they different from each other?
They're quite different in, of course, the periods of time in which they were used or active, and quite different in their setups. The Oracle of Delphi relied reportedly on the god Apollo to provide prophecies, whereas, as you heard from Jimmy, the Chainlink networks don't make use of the god Apollo, but make use of authoritative sources of data, typically from websites or from other blockchains related to a target blockchain. But in essence, their overarching goal was very similar. They both aimed to serve as definitive sources of truth. And I think the historical resonance here can actually be somewhat enlightening. And it can give us a perspective on what oracles can potentially do in blockchain systems and beyond. For instance, the Oracle of Delphi served, among other things, as a vehicle for consensus forming within communities. Right? The truths that it provided to communities were things that members of these communities could coalesce around. And in our kind of fractious age, when truth seems constantly under siege, it would really be nice to have an authority of that type. And my ambition, I think the ambition of people who believe that oracles can play a much larger role than they do today, is for them to serve as a positive social force. That's a long-term ambition. But by looking historically at the role that oracles have played, we can see we can gain a perspective on the expansive role that this particular technology can assume.
Is that fair to say that the Oracle of Delphi is more about asking the future, where or blockchain Oracle is about current or past information to ensure the true information be about it? So what I mean is that Chainlink does not provide a future truth.
We don't yet really predict the future, although we may well incorporate predictive models into our oracles. Actually, most of the questions posed to the Oracle of Delphi, not all, but most, were not questions about the future. And they were not, those who posed the questions were not receiving answers that were falsifiable. So questions were often things like, should we go to war? Should we found a colony? And if so, where? What God should we worship and how? So not so much questions about the future, although occasionally there were questions of that nature.
Okay. On your book cover, you have a Macedonian coin, as I understand, and then the other half is look like a Bitcoin symbols, and you put these two together. So I wonder what's the significance, what's the symbolism here that you try to convey on your cover?
Yeah, well, that coin is just a beautiful encapsulation of an important slice of Greek history that includes the Oracle of Delphi. And it's a very interesting and really quite beautiful coin. So that coin was first issued by Macedonian king by the name of Philip II. And on the obverse, the head side of the coin, is a portrait of the god Apollo wearing a laurel wreath. Well, Philip saved the Oracle of Delphi and Delphi as a whole at a time when it was besieged by some local Greeks called the Phocians. He defeated them at a battle called the Battle of Crocus Field. And he instructed his soldiers at that battle to wear laurel wreaths to signify that Apollo was on their side. So he had this coin minted to celebrate the fact that he had liberated the Oracle and to burnish his credentials as a Greek. He was a Macedonian, so he wasn't recognized by all in the Greek community as being truly Greek. Well, that Battle of Crocus Field ended up being pivotally important in the history of ancient Greece because it basically led to the Greek city-states losing their freedom, their independence for, in fact, thousands of years. But Philip II is better known for something else. He's known as the father of Alexander the Great. And that particular coin was minted, it is believed, at just a couple of years after the death of Alexander. And it's believed to be a near lifetime portrait, in fact, of Alexander the Great as Apollo. So there's all of this important history compressed into that coin. And that's part of the reason that we selected it for the book cover. And as you say, it's morphing into something that looks like Bitcoin or a physical representation of cryptocurrency. That's exactly what it's supposed to look like. Sorry, Victor, you're muted.
Can you hear me now?
Yes, better. Thank you.
Okay. Yeah, thank you. At the beginning of your book, you have one page called author's notes, and you have a very interesting sentence here. So I'm just going to read it out loud so that everyone can know. Quote, if the community take due care, they should remain technically unrealizable for some time to come. What you refer to, I believe, is the raw smart contract. So I have one question, is that what is preventing the raw smart contract be technically feasible right now? Like what do you mean here?
Yeah, this is really an important question. So at the time that I published or co-authored the paper that we discussed earlier, that Ring of Gyges paper that you briefly flashed up on the screen, the scenario in the book wasn't technically realizable because we didn't have LLMs that could interpret news articles and extract keywords. And that's what's required to achieve this scenario in the book. Today, it is technically feasible thanks to the advent of powerful LLMs. What we don't have is the infrastructure to support rogue contracts, thankfully. So the scenario in the book is not realizable today, but it's only a matter of time before LLMs are integrated into oracles and other parts of blockchain infrastructure. And so the book serves as a warning for the future. We need to be very mindful of how we combine these two technologies, blockchains and AI. And that has become, despite it not being my original intention, one of the central messages of the book.
You say that currently don't have infrastructure but can somebody just deploy a raw smart contract on Ethereum?
It would not be able to adjudicate claims. In other words, to be able to determine whether a crime took place and who is responsible for it today. That facility is lacking because the requisite Oracle functionality isn't there today, thankfully.
Okay, but in the near future, presumably the AI like LLM model can become an Oracle to bring the physical news, the real world news onto the blockchain to confirm whether some event happened or not.
Yeah, so we do have the technology in principle to realize the scenario in the book. Yeah.
Okay. So if that's the case, the story you talk about AI quite a bit. And then recently there's a lot of discussion about the safety of AI, and it sounds like a raw smart contract have something to do with AI safety, connect with AI safety. So how do you think that Oracle like Chainlink can help support the AI safety?
Yeah, to answer that question, I think we have to take a step back and understand what's happening in the novel from a somewhat broader perspective. Right? People are worried about AI escapes, by which I mean AI agents, rogue AI agents, being able to impact the tangible world in detrimental ways, being able to cause harm. And the scenarios most people have in mind involve control of cyber-physical systems, autonomous vehicles, weapon systems, and so on and so forth. But we have to recognize is that money, the financial infrastructure is also a potential vector of escape. If you control money, you have the ability to impact the tangible world. So it's important that we have controls in place that will prevent rogue AI agents from making harmful use of the financial system. How do we do that? Well, natural choke point, if you will, is the gateway to the piece of the financial system that's subject to abuse. And the part of the financial system that would, I think, be most vulnerable to abuse is a blockchain piece, or cryptocurrency. Well, what is the gatekeeper? What is the natural choke point? I would say Oracle systems. So ideally, Oracle systems become mechanisms for enforcing AI safety. And precisely what that looks like, I don't know. But as you heard from the discussion of CCIP, there are various guardrails in place preventing compromise of the bridge, right? And I think some of those safeguards can potentially apply in this other setting as well, helping enforce AI safety in the particular way that I described.
I understand that this is your second novel. How is the experience compared to you writing the second novel with the first novel? Like, what has changed? What did you learn to make your life easier in writing the second book?
Yeah, it was vastly different. The first novel, I like to say, was a difficult birth, a painful birth, and a birth that took some 10 years. It took me a decade to write the first novel. And in the end, I think I made some naive mistakes with the first novel. It takes time for a writer to evolve into a particular style. The second novel went much more smoothly, and I think was crying out to be written in a way that the first novel wasn't. I had a vision from the beginning of what the second novel should be. I kind of knew what the ending was. So the writing went much more smoothly. That's not to say that it was painless. It was extremely painful at times, but I would say that it was also very absorbing for long stretches of time and really gratifying to write. And I'm very happy with the way that this one shaped up.
Did you start writing the book before the ChatGPT released to public?
I did, actually. And like many others, I was totally blindsided by the advent of ChatGPT, and not only had to rewrite a little bit of the book, but had to rethink the central message of the book. You know, suddenly the scenario in the book became much more realistic. From distant future science fiction, or what I thought was distant future science fiction, it was transformed into near future science fiction and became a cautionary tale of real interest, I think, in the present, or importance in the present. So yeah, so ChatGPT had a real impact on the way that I have been presenting the story, and to some extent on the story itself.
Do you right now, the ChatGPT or other LLM model is still in early stage. Do you envision in the near future they can do the job what Chainlink, the network, is doing?
No, I don't think so. I think they serve a very different purpose. Moreover, they have a couple of limitations that make them unsuitable for certain security goals. In particular, the problems of hallucinations, the way ChatGPT will just make stuff up, other LLMs will just make stuff up, and more seriously, the problem of adversarial inputs, that you can without too much difficulty, and nobody's been able to devise robust defenses, come up with inputs to fool an LLM. So LLMs aren't ideal as at least standalone security tools.
And let's go back to the book. In your book, the main character, the narrator was unnamed. And was that a deliberate choice? Do you see yourself as the main character in any way?
I hope not. I certainly hope I'm not the main character for so many reasons. It wasn't my initial intention not to name the narrator, but as the writing process progressed, the narrator just resisted assuming a name. I almost felt that by imposing a name on the narrator, I would somehow dispel the magic of the story. And I'm not the first to have an unnamed narrator. There's a writer of spy novels, thriller novels by the name of Len Dayton, whom I greatly admire, who in his early books had an unnamed protagonist. Probably his most famous book was the Ipcress File, which was turned into a movie in the 1960s, one that was actually remade just a few years ago. And the character in that book was unnamed. He came to be known as Harry Palmer as a result of the release of the film, but he was unnamed in that book. So I basically just could not attach a name to my narrator in the end. And I feel that, in fact, not naming the narrator enables the reader to put herself or himself in the shoes of the narrator a little bit more easily in any case. So I kind of like it as a literary device.
Very interesting. I hope that somebody will make a movie out of your book. That would be
Me too.
very interesting.
Yeah,
Yes.
me too.
And also, are you planning to write any other crypto-related book, fiction?
Yeah, I do have one in mind that provisionally involves NFTs. NFTs in particular giving rebirth to objects or artifacts that haven't been in use for some time, enabling, for instance, old coins to recirculate. But this is still in its preliminary stages of development. Yeah.
Okay. I understand you also, besides teaching at Cornell, you also work as the chief scientist for the Chainlink Lab. like any interesting research you can share, like what area you are working on that may really make a change the the trajectory of the network?
Yeah, I'm working on a couple of different things at this point, and can't talk about all the details publicly, but I'm working to begin with on incorporating into the next generation of our staking protocol some of the ideas in our V2 white paper, in particular an idea called super linear staking impact, which achieves something pretty nifty and counterintuitive, namely you get more crypto economic security than is staked in the network. Just sort of remarkable you can achieve. We lay out the way that we do that in the V2 white paper. I'm also working on some new CCIP features with others. And the other thing I'm working on, in part as a result of writing the book, is a plan essentially for Chainlink to address AI safety issues in the blockchain landscape. As I mentioned, oracles being the gatekeepers to this part of the financial system are well positioned, I think, to help enforce AI safety. So starting to give some thought to how we might undertake that.
We would love to have you come back if you're ready to share your work on the token economics side. I think our community will be fascinated to learn your what you develop or what you improve on the current token economic of the Chainlink network.
Yeah, on the staking side, I could certainly come in and talk once we've released something. Yeah,
okay.
Happy to do that.
Okay. One last question before I pass on to open up to the community to let them ask question is like, if one thing you wish the reader take away after reading your book, is there any more of a story that you really want people to walk away with?
Yeah, I want the book to serve an educational purpose, among other things. And I actually wrote it in such a way that it's accessible to non-technical readers and non-blockchain specialists. Mm-hmm. But one message I really want to convey is that blockchains are not just about Bitcoin and dog-themed coins and scams and hype and so on and so forth, but that there's this deep reservoir of technical innovation underpinning the whole industry. Right? There is a rich community of researchers and developers working on a whole host of new ideas. Right? So there's this kind of dichotomy in the blockchain world that most people are unaware of. They hear about the Sam Bankman-Frieds and about the price volatility and so on and so forth, and never learn about the interesting facets of the technology or the culture within our community. So I try to convey some of that in the novel, and I hope that comes across to my readers.
Great. Okay, now I'm opening up the floor to any our member want to ask question. Okay, we have Alim want to ask. Go ahead, Alim.
Sure, yeah. Hey, Ari, thanks so much for being here. That was really great, and I'm really looking forward to reading your book. Just have a question regarding, I guess, the intersection of AI and blockchain, and you mentioned you're doing some research there as of recent. Where do you see the core applications? Like, are they really surrounding the ability for blockchain-based systems to be able to kind of verify training data sets and the fidelity of models that emerge? And like, I'm just curious, like, you mentioned the problem around hallucinations and these models, these LLMs, that could be like an inherent kind of black box issue that emerges. Maybe it's an emergent behavior that is something that can't be controlled. But would controlling the inputs and having these verifiable data sets that try to limit biases and try to have as much diversity as possible potentially solve for that? Or is like hallucination an issue that can't be addressed with the underlying data sets and training sets?
Yeah, hallucinations are a persistent problem. Hallucinations and adversarial inputs are just an inherent problem in these models, and clearly not peculiar to their use in a blockchain context. I guess there are sort of two sides to your question. Number one, what can AI do for blockchains? And number two, what can blockchains do for AI? And it is conceivable that an oracle, for instance, by restricting the data provided to input data provided to a model to data from authoritative sources, could at least help prevent injection of adversarial inputs. And that would certainly be useful. Another thing that blockchain systems might be able to do for AI is instantiate new business models for the training of machine learning models. That's, the vast resources required to train machine learning models might come not from a traditional corporation, but instead from a community through a DAO. This is something that people talk about. So essentially decentralizing the process of creating models and decentralizing control of those models. There's also a question of what AI can do for blockchains, like why incorporate an LLM or another machine learning model into an Oracle system or some other part of a blockchain system. And I think the answer lies in comes from an examination of the limitations of smart contracts as they exist today. Smart contracts are pieces of code, and they enshrine agreements in the form of code. And consequently, they lack ambiguity. And that's seen as a good thing. And in certain contexts, it is a good thing. But human beings and human institutions, and our legal institutions in particular, typically rely on natural language and operate in environments that are filled with ambiguity. And we, as human beings, are accustomed to navigating a landscape of ambiguity and thinking in terms of and striking agreements that make use of natural language. So I see LLMs in particular serving as interfaces between smart contracts and our existing legal codes, and providing a mechanism by which human beings can use natural language to craft smart contract enforced agreements. So I think they will greatly enrich the scope of applicability of smart contracts.
Ari, do you see AI agent play a role in DAO, decentralized autonomous organization on blockchain?
I see rather DAOs potentially supporting the development of new machine learning models in the way that I described. Yeah, but it's quite conceivable that AI agents will somehow play a role in DAOs. Maybe they're responsible for formulating new proposals, governance proposals, for instance. Right? Hard to say, but I can well imagine such a thing.
Thank you. Any question from our community member?
I see one in the chat window.
Oh.
Did I research the blockchain detail for myself, and did I get any technical third-party consulting or review for precision or realism of technology preferences? So I would say the process of doing research on the technology side of the book was very unusual. Normally, an author will go out and read scholarly papers and basically bone up on a certain piece of subject matter and distill out some learnings for the book. But I was basically living the research in the book, in the sense that much of the technology in the book derives from research going on in my group at Cornell Tech, both in the past and the present, actually, as well. I did consult to some extent with colleagues to get details right. In particular, my Chainlink colleague, Lorenz Breidenbach, helped me game out some pieces of the novel and polish the novel a bit to ensure more realism. But for the most part, the technologies described in the book were things that I happen to be working on anyway. So most of my research, in the sense of assimilating the work of others, came more on the historical side, learning about the Oracle of Delphi. I'm not a classicist, although I have an amateur interest in classical history, but I'm not a professional classicist. I'm a technologist.
Does Cornell offer any course on blockchain or cryptocurrency?
I teach a few courses on blockchains and cryptocurrency, actually. I'm currently teaching a course to technical master students and also a couple of MBA courses.
Great.
Yeah.
Any other questions? Okay, I think now it's 8:30. So thank you so much, Ari, for taking your time out to speak to our community. And thank you so much for sending 50 books to share with our community members.
A pleasure. Thank you for inviting me.
Thank you, Ari. Really appreciate it.
Thank you.
Thank you, Ari.
Thank you. Have a good evening, everyone.
Thank you.
Thank you, Ari.
Okay, so I guess we're gonna wrap it up there. Just want to express extreme gratitude to Aleem, Victor, Jimmy, and Ari. Thank you for being part of today's discussion. We feel incredibly fortunate to have such a diverse, knowledgeable group here. Jimmy, your presentation was truly captivating. I learned a lot about tokenization of real-world assets. And Ari, we're all really looking forward to reading your book, which, if no one knows here, it's actually currently ranked as the #2 most gifted in the high-tech science fiction category on Amazon, which is super impressive. So that's great. To our community, we wanted to just say thank you again. We value each and every single one of you, and we're really lucky to have you all here with us. As mentioned earlier, this session is recorded and will be shared on our Twitter, LinkedIn, YouTube, and Meetup page. So if you know anyone that's missed the Meetup, they'll be able to rewatch it. And if you have any questions, please don't hesitate to reach out to us on Twitter or send us individual messages or join our Telegram group as well. And I just want to say thank you to everyone who participated. Looking ahead, mark your calendars for our next meetup, which is actually in person on Thursday, March 14th. And we'll be giving out 50 copies of Ari's book. So stay tuned for more details, and we can't wait to see everyone there. Thanks, everyone.
Have a good night.
Good night. Good night, everyone. Thank you, Sophia, for moderating.
Thank you.
Thanks, Victor, for major contributions to the recap slides. Appreciate you.
You're welcome. You're welcome, Aleem.
Yeah.
Great.
And Aleem for the recap. So nothing but love here today.
Yes.
Bye, everyone.
Bye.